I'm Matt Bouchard with REITWeek.com here in New York City for REITWeek 2015, NAREIT's Investor Forum. Joining me today is Ella Neyland, President, Steadfast Apartment REIT. Ella, thanks so much for joining us.
Thanks for asking me.
Now, Steadfast has focused its portfolio on Class B apartment communities in secondary markets. What is the growth potential of this niche as you look ahead?
I think it's tremendous, and we actually call them moderate income because Class B implies that there's an A and a B and a C. So, but all kidding aside, we believe that the economy and the demographics are creating, in essence, a nation of renters. The millennials, who are the children of the baby boomers, are getting married later, they're having children later, and they're picking apartment living as a lifestyle choice, which is great for the apartment industry. Now, having said that, they're not making a lot of money when they get out of school, and they have a lot of student loan debt. And so they are looking for apartments that they can afford by themselves because they don't necessarily want a roommate. They know they're going to be living there until their lifestyle changes, probably mid-30s. And so you're seeing people get out with average incomes of about $35,000. And if you look at a kind of a 3-to-1 ratio on income to rent, moderate income apartments are in high demand. In fact, they're in such high demand, there's not enough to really meet the demand for moderate income apartments for these millennials.
And picking up on that, with that sort of demand drivers, how is the market for acquisitions of these types of assets?
For us, we buy in the middle part of the United States. Our inventory stock is typically average age of about 10 to 15 years on average, and half of the apartment stock in America was built before 1979. So we've got a big inventory to choose from, and we tend to buy on a one-off basis, so we don't compete against institutional groups. And we also tend to see pretty much everything that's for sale in the United States on the apartment basis because we are a big acquirer of assets. We bought $1 billion in 2013, and we bought $500 million in 2014. So we know our markets, and we can pretty well pick and choose what we wanted. So there's a huge inventory for us.
So you mentioned this sort of new nation of renters. What are some of the amenities that these kind of renters are looking for, and how has that changed in your years in the business?
And I've been in this business for about 35 years, and it's interesting, the decision matrix that people go through when they pick an apartment has not changed in 35 years. First thing's location. They pick where they want to live, typically near where they work or near where they have family. The second thing is price point. You may like to live somewhere like downtown San Francisco, but you can't afford it. And then the third sort of, there's a moderation of what they're looking for. But as far as amenities, for us, we really focus on the two first things, the location and delivering a quality apartment at a price that most people can afford, which is about 1/3 of their take-home pay. And then on the amenity side, the thing we're seeing today are dog parks, pet parks. And if you think about it, when I mentioned that the millennials, since they're living in an apartment longer, they don't necessarily want a roommate. They don't necessarily want a two-legged roommate, but they definitely want a four-legged roommate. So it goes to this sort of quality of lifestyle. So pet parks are a huge amenity. And the other interesting thing is that we're finding the millennials are socializing at pet parks. If you think about it, they come home from work, they take their dog down, and they can have a kind of a quick conversation with someone, kind of assess as opposed to like a dinner date. So it literally is sort of the new meeting grounds for these 70 million millennials. So it is the social amenity that we find that they like the most.
Ella, thank you so much for joining us.
I enjoyed it. Thank you very much.
For more on this and other REIT news and analysis, be sure to visit REIT.com.